Greetings traders and welcome back. Chris here bringing you another survival guide. Today's subject will be what is day trading? We're going to talk about what day trading is at its core, how you can get started, and some of the pros and cons associated with day trading. Now, this subject is going to be one that's more catered towards traders that are just beginning to dip their feet in. Here at Earn to Trade, we have all different categories of traders that come to us. We have traders with 10 plus years of experience, and we have traders that have no experience whatsoever, and a ton in between. So this will be more on the novice side of the category. If you already know what day trading is, then you may be more interested in some of our other videos that are based around some technical analysis or various other subjects. But if you are new, this is the type of stuff we need to hear in order to get on our way to passing things like the Gauntlet Mini. But without further ado, let's dive on in and have a good chat about what day trading really is. With the growth of technology, it's no surprise really that what is day trading is a question that's one of the top queries on Google when it comes to trading related terms. The reason behind this is quite apparent. There are a lot of traders out there that are interested in getting started that have yet to do so, and are searching for the first logical step, which is starting at the beginning. And the beginning is figuring out what in the world we are talking about before we dive further. And that what today is going to be day trading. By the definition, day trading is a form of active trading where the trader buys and sells assets and securities multiple times within one trading session. This portion right here is key. One trading session. The idea and definition of day trading is having our positions open and close within the same day. Day traders open and close a number of trades per day, not just one. Their strategies are focused on making profits from the intraday price changes. The idea here is that by avoiding holding on to positions overnight, they're avoiding some of the risk that is associated with overnight periods where they may not be able to close their position out when they want to due to liquidity or just due to the fact that the market they are trading may be closed and not available to trade at that particular time. Day traders prefer highly liquid assets, so they don't risk being locked into a trade for this exact reason. They want to be able to get in and out exactly when they want to, even if it's only after a gain or loss of just a couple ticks. It could be the smallest movement, but that is okay and could be more than enough for a day trader to make the profits that they need to deem the day a successful day for them. Despite the concept of day trading having been around for quite a while, it really didn't kick off until the advent of the electronic age where we were all provided with this luxury of having an internet-based system where we can execute orders in milliseconds versus having to call into the pit and have someone execute for us. As the name suggests, day trading does involve closing the positions like we mentioned before the day is done, and the reason behind this is to keep the risk at a minimum if at all possible. And it's really more so about not just mitigating the risk, but about maximizing control. So by closing the position off while the trader is no longer monitoring it, the trader no longer has to worry about that particular position, which usually is some type of higher leverage position to allow them to make more money from smaller amounts of movements in the market. So the idea here is the day trader wants to close that position off before the night comes rolling around or whenever it is that they plan on leaving their screen. That's the idea. Day traders in general tend to average from 5 to 8 positions a day, somewhere between the open and the close. Now, we don't want to consider this to be a goal. This is just a statistical average. It doesn't mean that in order to be a successful day trader that you have to average 5 to 8 positions a day. We actually encourage the opposite. We encourage that you pursue the trades that you feel are correct trades instead of an arbitrary number. So once again, day traders, even though they are averaging somewhere around 5 to 8, we only want to use that number to give us some sort of reference point to get an idea of what it's like in the average day of an average day trader instead of using that as a particular goal. It's also worth noting that day traders can operate on multiple trading venues simultaneously, and the idea here is they're seeking to profit from the price movements of one or more assets by using the arbitrage that's going on between those two venues, meaning two different exchanges. If one is priced higher over at venue A and something's priced a little bit lower at venue B, they may look to profit on some of these discrepancies. These are one of the tactics that day traders use. As far as what day traders are trading, the forex world still dominates the day trading market landscape, but futures are quickly coming up in second place. As far as forex goes, some pairs to pay attention to that are some of the most liquid forex pairs that are available to be traded would be the euro dollar, the dollar yen, the pound dollar, Aussie dollar, New Zealand dollar dollar, the dollar CAD, as well as the dollar franc. Now we're going to talk about some of the steps that we should take if we are interested in pursuing day trading, that style of trading, as a career. The first one is the self-assessment phase. With any professional endeavor, it's important to know where we stand. This means that we take an assessment and say, what are my skills currently? What are my strong skills? But also, what are my weak skills? A very important part of this phase is to identify how we function under pressure. Day trading is a high-stress environment. We need to be able to rebound from emotional triggers without too much difficulty. We want to find a balance where we can trade and function almost like a computer, but without having too much emotional involvement in any of the positions that we're taking. We have to be driven, but also balanced. Analyzing all of this is part of the self-assessment stage. Then we have the resource estimation. Resource estimation simply means we need to consider our time and money situation that we have at the moment before we dive into trading. Before we dive into any trading, that is, but especially before we dive into day trading. Day trading doesn't guarantee a quick or easy profit overnight. It does take time and patience in order to learn what is required to become a profitable day trader. So we need to be realistic about where we stand currently financially and be realistic about how long we can go with how much time devoted without causing too much damage to our external life that is currently sustaining the endeavor of day trading. And number 3 is going to be practice patience. This is huge. You've often heard people say throughout your life, I'm sure, that patience is a virtue. It is a must in the day trading world. We need to practice patience and be very, very well in tune with being patient, because one of the key failure points that I see with traders on a daily basis is something called FOMO, which is the fear of missing out. And FOMO stems from lack of patience. It stems from getting bored with the charts and finding a setup that you feel may be good enough, even though it's not as good as it should be. And then we get involved with a situation that becomes sticky, and then we snowball from there. So patience is an absolute must. Then we have step number 4, which is develop a strategy. Another crucial portion of the day trading endeavor is to have a sound-based strategy, a strategy that we can follow. That way we don't have to think so much when we're in the fray of the battle. It's more muscle memory instead of deciding with like an artistic landscape. We don't want that. We want to have all of our actions planned out ahead of time. And then number 5 is use a demo account. This goes hand in hand with the develop a strategy phase. The reason is using a demo account can help us develop a profitable strategy without risking any financial capital. In the past, we've actually done a video on why a demo account is important and how we can go about doing it. So make sure to check that out as well if you are interested in the demo account phase. Naturally, we do things because there is a particular draw to them, and some of the draws to day trading can be summed up in these 3 categories. The number 1 draw is the high profit potential. High profit potential means that the returns that day traders are making is just absolutely ludicrous when done correctly. It's an amount of money that can even make the bankers jealous. Considering the compounding effect and the accumulation of the capital over time, day traders can have more money than they know what to do with when done correctly. Then we have universal application. This type of trading activity can be applied to all asset classes, from forex, stocks, futures, options, cryptocurrencies, and more. We can day trade just about anything, which means once you learn the skills needed to be able to be a successful day trader, you aren't limited to whatever it is that you learned on. Then we have the transferable skills quality of day trading. If you do manage to master day trading, it means you're capable of doing technical analysis, paying attention to the news, performing backtesting, navigating the markets under pressure, being self-disciplined, and the list goes on and on and on. The ability to do all of these things are skills that will be extremely important throughout all walks of life. So the skills that we must master to be successful day traders do transfer into other things that are completely unrelated to day trading. There are potential cons to day trading as well, with the first being high trading costs. This simply means that because we are trading multiple times throughout a single day, our commissions or fees that we're going to be paying are going to be higher than someone that simply opens one position every month versus someone that's opening 8 positions a day. Then we also have the high risk aspect. Because we are trading with usually leveraged positions or just a higher amount for a smaller market movement, we're exposing ourselves to more risk for volatile situations in the market. This means if there's a sudden swing in the market, a day trader is going to be in a much riskier position than someone that is position trading. Then we also have harder and more stressful as a potential con, and this is because the stress level is absolutely higher because there is more trading involved. Trading is inherently stressful, which means more trading means more stress. And the harder aspect means that we have to be more precise with our position choices and our exits and entries due to the fact that we are trying to nail an entry point and exit point only to scalp out a small amount of a market move instead of the grand scheme of a market trend. In conclusion, day trading does require more patience and more skill than other forms of trading out there, at least in my opinion. Position trading and swing trading involve less trading, therefore it involves less decisions to be made, therefore, in my opinion, it is simply easier to do. But with day trading, when done correctly, the profit potential is nearly limitless. It's not something that is meant for everyone. It is a particularly high stress style of trading, but it is something that can captivate your interest in a very profound way that's hard to describe. Think of it like a Rubik's Cube that is constantly changing. We might have a strategy that works for a month or so, but then the market starts to change, and that strategy no longer works. So a lot of people have this misconception that once you have a working strategy, it will always be a working strategy. But that's not the case, and that's not what keeps us very intrigued and interested in day trading. It's the ever continuously changing challenge that presents itself, and it's all so rewarding when solved correctly and when you take it with a serious professional approach. I hope you have a great journey if you do begin day trading, and make sure that you start with some of the things that we talked about here today and absolutely incorporate a demo account into your learning experience. I appreciate you joining me today, folks, and if your goal is to pass the Gauntlet Mini, then guess what, guys? We have all kinds of information out there for you that we've already done, so make sure you check it out, but I will see you in the next one. Cheers, folks.